Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing some longer-term technical analysis on Bitcoin because in this video, I want to show you guys a weekly technical indicator that has an almost perfect track record of predicting downturns in Bitcoin. I'm going to be showing you how in the last 3 years or so, every single time, literally every single time that this technical indicator predicted bearishness, there was some kind of downtrend or bearish rally to follow or correlating with that technical indicator's bearish cross in some way. I'm going to be showing you that in today's video, and we're also going to be talking about how this technical indicator is showing bearishness for Bitcoin, and we're going to see a bearish cross on it happen in the next month or so. Guys, this could actually be pretty bad for Bitcoin, so this is a rather important video, and I've never talked about this on the channel before, so I think you guys are going to get a lot of value out of this video. If you do, definitely consider dropping a like, hitting that subscribe button, and smash the notification bell, guys. And like I said in yesterday's video, if you didn't like the video, go down there, hit the dislike button twice so I know you really didn't like the video. But without much further ado, let's go ahead and get right into it, guys. All of today's technical analysis is going to be happening on the weekly chart, so we're going to be looking at the Brave New Coin Liquid Index. You guys are probably familiar with this chart. This chart consolidates a lot of the different price action from many different exchanges to create the longest chart in Bitcoin history, going all the way back to some parts of 2010, actually. Very, very old chart, useful for using our longer-term moving averages that we'll be looking at a little bit later on in the video. So, without much further ado, I guess we should go ahead and show you what the technical indicator is, and it would be the weekly Stochastic RSI for Bitcoin. Now, before you guys crucify me in the comment section down below, I have been told that Carl from the Moon has covered Stochastic RSI on the weekly chart and has talked about what I'm going to be talking about in this video. I got a comment on yesterday's video saying that Carl had covered this, and there was a really interesting topic, so I went ahead and did some research on it, and lo and behold, he really hit some gold, because this is a very powerful technical indicator out here on the weekly chart, and you may see some similarities between what I talk about in this video and what he talks about in this video. Guys, we're both doing the same technical analysis. Sometimes there's going to be some overlap. It doesn't necessarily mean I'm copying him, so, you know, just relax. We're going to go ahead and get on into it anyway, though. So the first thing I want to do is show you guys how reliable this technical indicator is and how useful it is and how correlative, I should say, it is at predicting downtrends in Bitcoin. If you come up here to the top left of TradingView, you can switch from your arrow to your cross, and this cross is very useful for lining up things that are happening down here on your oscillators and the price action itself. You can see we have our vertical and our horizontal axis around our cursor here. As we can see here, Bitcoin's Stochastic RSI on the weekly chart is up here in overbought territory. We'll get to that in a second, but I want to talk about the track record for Stochastic RSI on the weekly first. As we can see right over here, we see that there was a bearish cross on Stochastic RSI in late July, early August of 2018, followed by or actually this was just following a crash on Bitcoin right over here. Similar thing happened in early May. Bitcoin had gone and rallied all the way up to around $10,000, and there was a cross on the Stochastic RSI that caused it to crash. Right over here, when Bitcoin ran all the way up to $20,000, there was a cross on Stochastic RSI to correlate with that. A couple days before the crash, Bitcoin Stochastic RSI crossed. It was actually right on the same day, because on the 18th of December, we had confirmation, and about a day or so before that, the crash had begun. Right over here, in October of 2017, we saw that Bitcoin capped out at $8,000. You can't really see it on this chart, but this is right around the time the channel started. Of course, the chart doesn't show that the channel started there, but right here, Bitcoin hit $8,000 and had a very small retracement, and that was what was correlating with that Stochastic RSI cross. Right over here in late August, early September, when Bitcoin hit 5K, same thing. When Bitcoin hit 3K, same thing. Guys, we can go back here for a long ways. There's just a little bit further I want to show you. Right over here, when Bitcoin hit $3,000, I already showed you that one. Right over here, when Bitcoin hit $1,300, cross on Stochastic RSI. Right over here, this is the one that I want to talk about for later. Bitcoin had a cross on the Stochastic RSI right up here, and it crashed from around $1,200. This one is a bit of an anomaly, though, because Stochastic RSI stayed overbought for a very long time. We'll be talking about that in a little while. But I think you guys get my point. Stochastic RSI on the weekly chart is a very good indicator of crashes in the Bitcoin market. Now, make sure you watch to the end of this video, because I do have some problems with this indicator. It's not perfect. I do want to show you guys those. But before I get into that, I do need to show you what's going on the weekly chart right now. And therein lies the problem that we're talking about in this video. And that is that Stochastic RSI, for the first time in a long time, really in over a year, Stochastic RSI is sitting up here above 80 in the overbought regions, which you might say, oh, well, Jeb, that's a good thing. That means that the market is turning more bullish. And I would completely agree with you. That is a good point. Bitcoin is turning more bullish. We're definitely entering an accumulation phase. The bear market is wrapping up. The bull market is probably coming in the next 12 months with a very high degree of certainty. Bitcoin is looking a lot stronger. That is one of the reasons Stochastic RSI is sitting up here, is because Bitcoin is looking a lot stronger. These are technical indicators that are based on mathematics, that are based on the size of the candlesticks. So Bitcoin is definitely turning more bullish. The problem is that might be about to change because, as you guys know, what goes up must come down, and also in the case of Bitcoin, what goes down must come up as well. But Bitcoin's Stochastic RSI is sitting up here in overbought territory, and there's probably going to be some kind of cross on Stochastic RSI in the next couple of months. And when that cross happens, as we've seen from our previous price history, over here in the last 2 to 3 years or so, when there's a cross on Bitcoin's Stochastic RSI, that almost always correlates with a crash in Bitcoin. And these are not minor crashes either. These are crashes that are visible on the weekly chart. It's like seeing something from space. If you can see it from space, it's probably pretty big. If you can see it from the weekly chart on Bitcoin, it's probably a pretty major move. And all of these moves that we're seeing here are showing up on the weekly chart. Now, we do have some kind of little whatever that was for a couple of months over here on the later part of 2018, but for the majority of the history of Bitcoin for the last couple of years, Bitcoin has seen a lot of correlation between its chart and Stochastic RSI. So when this cross happens, because it is a matter of when, not if. Like I said, this is what goes up must come down, what goes down must come up. This is an oscillator, and oscillators tend to, oscillate. Typically, this is going to fall over sometime in the next couple of months. It might be a month from now, it might be 2 months from now, but this is going to fall over. And when it does, that's probably going to be very bad for Bitcoin. And now, this wouldn't be that big of a deal if Bitcoin were in one of its rallies over here and away from its level of support and it had room to retrace. But this is the entire reason I'm making this video. This right here. Remember this moving average that I've talked about in like 5 of the last 7 videos? This is a really important moving average, guys. This is the 200 weekly moving average. I've talked about it a lot in this video, so all my subscribers are probably familiar with it by now. I'll be very brief, but this is a very important moving average for one reason, and one reason mainly. Not only, but mainly. When Bitcoin was in an accumulation phase back over here in 2015, Bitcoin got a lot of support down here on the 200 weekly moving average. And as I talked about in a previous video, which I will link in the top right, whenever Bitcoin comes down into an accumulation phase, it tends to get a lot of support on the 200 weekly moving average, and there are a lot of similarities between 2014-15's bear market and 2018-19's bear market, one of them being this 200 weekly moving average. We would be breaking long-term market structure and entering unprecedented territory if we break the 200 weekly moving average. We do not want that to happen. But at the same time, Stochastic RSI looks like it's about to turn bearish, and when it does, we're probably going to see enough bearishness that would push us below the 200 weekly moving average. So we're kind of in a pickle here, guys. We can't go below the 200 weekly moving average or bad things will happen. But we also have the Stochastic RSI that is potentially going to push us below there. Here's the thing. Bitcoin has been in this position before. If we look back at 2015, Bitcoin did have some bearish crosses on the Stochastic RSI when it was above the 200 weekly moving average. We saw 2 of them, 2 major ones right there, and Bitcoin still managed to hold the 200 weekly moving average. Now, back to the bearish case, Bitcoin at that time had a lot more room between itself and the 200 weekly moving average. Bitcoin comparatively, back then, Bitcoin would have been somewhere up here around $6,000, so it had a lot more room to retrace down to the 200 weekly moving average. Right now, we're not much further above it. If we look here, Bitcoin's like 10 or 15% above the 200 weekly moving average. But if we look over here, then Bitcoin was much farther above it at these points. It was about 30 to 40% above it. So there's a lot more room for Bitcoin to go bearish. Now, with all of this in mind, what are our scenarios? What's going to happen to Bitcoin? Is this going to get bad? Let's talk about that, because this is, like I said earlier, a matter of when, not if. There is going to be a bearish cross on Stochastic RSI at some point. So what is it going to bring? Well, there's a reason that I mentioned Stochastic RSI staying up here in overbought territory for a long time, back over here in 2016. If we look here, Bitcoin stayed in overbought territory for a total of about 70 or 80 days. That's a long time for Stochastic RSI to be overbought, and we just entered that territory. Best case scenario, let's say Stochastic RSI does that again and stays up here for another 60 or 70 days. That puts Stochastic RSI staying bullish and putting off this bearishness until sometime in April, maybe even early May. And in that time, a lot of good things can happen to Bitcoin. We know that the fundamentals are looking very good for Bitcoin, so perhaps we could have some kind of fundamental thing happen, or perhaps we could see Bitcoin break that downtrend of resistance that it's been under. Perhaps Bitcoin in that time will get further away from the 200 weekly moving average, and when this cross happens, Bitcoin will have more room and it won't go below the 200 weekly. That's what I'm hoping for, because I really don't want to see what's going to happen with the other 2 scenarios that I'm about to show you. Because the other 2 scenarios look something like this. We extrapolate Bitcoin's weekly moving average out something like this. The Stochastic RSI crosses sometime later on in March or early April. maybe even the 1st of April. I'm by no means calling these the dates, but sometime over here in the next month or so, we'd see the cross. Bitcoin crashes, and it almost certainly goes below the 200 weekly. I find it very unlikely that Bitcoin will see a cross on the Stochastic RSI, such a powerful technical indicator, and not see a crash far enough to go below the 200 weekly. So there's one of two scenarios if that happens. One of the scenarios is that Bitcoin crashes below it and then immediately gets support and comes right back up above it, and all of the price action below the 200 WMA is on a wick. We saw that happen last Bitcoin accumulation phase, where Bitcoin crashed below this moving average several times, about 3 times, once there and twice there. We saw Bitcoin go below it, but that was on a wick, and a lot of people were able to come in, the bulls were able to come in, buy up Bitcoin, and save Bitcoin. That is the next likely scenario, and I would honestly say that's probably what's most likely of these 3 scenarios to happen. Bitcoin is, in my opinion, of the 3 scenarios, there's a plurality of the likelihood that Bitcoin is going to fall below this and immediately come right back up above it. And we're going to see a wick go below there, but we're not going to see a candlestick close below there. Now, the 3rd scenario is particularly bad and could extend the bear market by several months. And I'm saying bear market, I know I've been saying for a long time we're in an accumulation phase. I would say if the bear market is back on if we go below the 200 weekly moving average and close below there. That's how powerful that is. Let's talk about price targets if Bitcoin stays below there, because that is what everybody is here to see. If Bitcoin goes below the 200 weekly moving average, there are some price targets that I want to show you guys. One of them is another moving average. It would be the 400 weekly moving average. This has never been relevant in the history of Bitcoin. So why am I showing you guys it? Well, the 400 weekly moving average takes about 8 years of price history, about 7.5 years of price action, and puts it into a simple moving average, just the same way the 200 weekly moving average does. So it's never been relevant because Bitcoin is so young, but it is an important level of support because as you guys know, a lot of these levels of support, a lot of these moving averages are basically just 2 times the one below it. You have the 25. Well, sometimes you don't use the 25. You use the 20, then the 50, then the 100, then the 200. And the next one, of course, is the 400. The 400 weekly moving average is sometimes important on stock markets. We can look back on here at the S&P 500 and see that the 400 weekly moving average is kind of purplish color. I'm colorblind. You guys can tell me what color that is. Well, that typically does have a little bit of support. I wouldn't say it's as powerful as the 200 weekly, but we do see that there's some trading around it, like right there, for example, on stock charts. And the same thing would probably be true for Bitcoin. Of course, we don't know that just yet because Bitcoin is such a young market. But I would put that as one level of support to be looking out for, the 400 weekly moving average, because it also lines up pretty well with right around $2,000. It's sitting around $1,800 right now, but a zone between $1,800 and $2,000 could be a likely level of support. We've seen a lot of trading right around over there, so there's a lot of support. Right over here, we saw a lot of trading around $2,000. We saw some bottoms over here around $1,800. That's another level that we're looking at. That's right around where the 400 is. That's a level I'd be looking at. Another level I'll be looking at, if we go below the 200 weekly moving average, would be the previous all-time high, right around $1,200. This is going to be an important level. Previous all-time high for the previous bull market before the 2016-17 bull market, that's going to be a huge level of support, guys. So I don't think Bitcoin's going to go all the way down here to the $1,000 range. I doubt Bitcoin would go below $2,000. If anything's going to catch it, I would say the 400 weekly moving average and some other levels of support in this region will catch it. But if Bitcoin does go below there, I see no scenario, not one, in the 13 million, whatever that Dr. Strange said. I see no future where Bitcoin goes below this previous all-time high. I don't see it, not yet anyway. Maybe Bitcoin does. I highly doubt it. But this is probably the floor for Bitcoin. I don't see Bitcoin ever going back to 3 digits. I just don't think it's ever going to happen. Those are levels of support I'd be looking at, though, if Bitcoin breaks the 200 weekly moving average. Now, with all of that out of the way, I want to go back and talk about some of the problems I have with this prediction, some of the problems I have with the Stochastic RSI out here on the weekly chart, like I said I would. Now, there is one major flaw with this indicator, the Stochastic RSI, and that is that oftentimes, if we look in here and we look a little closer, a lot of times we're going to see that this cross on Stochastic RSI happened, as you can see right here, it happened after the crash had started. As you can see, the cross happened in between these 2 candlesticks here, after the crash had already happened. It started closing in on itself. Stochastic RSI started closing in on itself after the crash had happened. If you were to be looking at the chart like that, this is what the market would have looked like. I don't know why the chart's glitching out like that. But if we were to look at the chart like this, Bitcoin, you weren't really able to use this as a predictor. Bitcoin's Stochastic RSI was just moving up, and then the next time you move over, there's already a major red candlestick. Oh, well, now it starts closing in on itself. Thanks for the warning, Stochastic RSI. Same thing over here. Stochastic RSI is rallying. It looks like it maybe is going to come down, but you don't know until the crash starts. Same thing over here at $20,000. I believe it was anyway. Let's look. Right over here, Bitcoin Stochastic RSI was looking fine up until this cross. Right over here, Bitcoin Stochastic RSI was closing in on itself. Right over here, Stochastic RSI was closing in on itself. Right over here, Stochastic RSI was already closing in on itself. So if you look at it like that, and you look at it from the time, from the point of view of the person who's already doing the technical analysis, at the time, if you're looking at it from the shoes of the person doing the TA in the past here, it's not as good of an indicator as it looks like to be on the surface. With that said, Stochastic RSI is an oscillator. And oscillators tend to, well, oscillate. And when an oscillator goes into overbought territory or oversold territory, typically there's going to be some kind of reversal. Typically there's going to be some kind of crash if Bitcoin is having an oscillator in the overbought region. Typically if it's in the oversold region, there's going to be some kind of rally. It's rare for Stochastic RSI to stay up here for months on end. It has happened before, but it is rare. And normally when Stochastic RSI comes down, it comes down quickly, it comes down hard, and it does cause a major crash in Bitcoin, or it does at least correlate with it. So watch out for this technical indicator. It's not an oracle. It's not a golden. It's not a crystal ball. It's not a soothsayer. It's not gonna tell you what the lottery numbers are or anything. But you do have to be careful about this one because this one does seem to have a little bit of power. It does seem to be important. Watch out for it because it is going to be important in the next couple of weeks. I do see that this is going to be potentially very bad. Another thing that I forgot to mention is that we see an inverse hammer here on Bitcoin. That might be bad. I just did a video for the Cryptocurrency Technical Analysis Academy on candlestick formation, so I have a little bit of a bias here. If we go out to the Binance chart, you can still see where I was showing all the different indicators there. But anyway, guys, that's basically what I want to talk about in today's video. I want to show you guys the Stochastic RSI and run over why this is such an important indicator, why I've been looking at it ever since I heard about it, and why this might actually be bad for Bitcoin over the next couple of weeks. Tell me in the comment section down below what you think of this technical indicator, the Stochastic RSI. Do you think it is predicting a major bearish breakout for Bitcoin, or do you think Bitcoin is going to rally even in spite of the Stochastic RSI? I'm not necessarily saying in this video, by the way, that I think Bitcoin is going to go below the 200 weekly moving average. That's not what I'm saying. I'm simply laying out scenarios for you guys to ponder yourself, because I can say whatever I want, but sometimes the market's not going to do what I say. Sometimes the market's not going to do what you say. Sometimes the market's not going to do what the best technical analyst in the world says. So it's important to look at all the different scenarios, and then after we have a little bit of a hiccup attack there, after we have a good understanding of what all the scenarios are, then we can kind of try and figure out what the market's going to do in the future. And that's kind of the entire point of technical analysis, is predict the future so that you're ready for it in the present. So like I said, tell me in the comment section down below what you think of that technical analysis. Also tell me in the comment section down below if you guys prefer longer term technical analysis or shorter term technical analysis. I'm actually going to put that one in a poll in the top right, so go ahead and click that. I do like doing longer term technical analysis, but of course, since it's longer term TA, there's only so much you can do before you run out of stuff to talk about, so I try to do some more shorter term stuff to satisfy you guys in the interim. Another thing I wanted to mention, I kind of touched on a second ago, is that there are going to be some new videos going out for the Cryptocurrency Technical Analysis Academy in the next couple of days. I just finished recording another video for it. That's what I was talking about a second ago with all of the indicators here. I just recorded a video on a lot of different candlestick formations, candlestick patterns that I think you guys are going to find very interesting. We have 5 new videos going out for that. If you guys are interested in joining the Cryptocurrency Technical Analysis Academy, you're interested in learning all about technical analysis while also helping to support the channel, I do highly recommend you check the link in the description, see what we have to offer. We have over 6 hours of content across 20 videos. That's soon to be 25 videos at a very reasonable price, I think. So go ahead and check that out in the description down below. Anyway, guys, that's going to do it for today's video. I do want to thank each and every single one of you for watching, as always. God, I love saying that. And I will see you guys in the next video. Peace.